the primary focus for most investors, and that's kind of what happens from here. The earnings picture, I disagree. I think it's actually been pretty tough. We're down 9% year over year for this quarter. We've got top line growth. We have probably wage pressure coming that's going to put some more pressure on the margins. So what's really going to change the dialogue or the outlook? And my focus has been on the dollar. I think as the dollar has weakened a bit this year, that's given some people maybe a different outlook on where earnings will go. And certainly all this weakness in earnings can be attributed to a very strong dollar that we saw in 2015. But as you notice, it's bouncing off a pretty important support point in here, right around 93, 94 on the DXY. And I think watching that is really, really important for what happens next.
And you're saying that this is not only leading the equity market and having that impact that you talked about on earnings. You're saying that the Federal Reserve right at this point is also trapped by what's going on with the dollar. Explain that to our viewers.
So anybody who's seen, what Yellen had done this year, really, and her discussions about and her worries about international events, is pointing to some of the unrest we've seen in the yen, as far as the yen rebounding very strongly against what really I think a lot of
people thought Corona. She came out very, very dovish because of that, and the dollar weakened because of that. So I think what the thing about currency markets is, because they're so big and liquid, they're actually bigger than central banks over time. And so one of the things that the dollar does is it pushes pressure upon the central banks to have to do different things. So, for example, I think the example with the yen is a great one. You come out with a policy mistake in the form of negative interest rates, and guess what? Negative interest rates are negative. And they don't help your economy. They really hurt your banking system. And a lot of the people who thought that Kuroda could push the yen down, it's coming right back up.
Okay. So, Mark, that's the yen side of the story. The dollar side of the story is what you're saying. Are you saying then that the dollar is forcing the Fed to be a lot more cautious than maybe economic fundamentals in the U.S. warrant, and in fact forcing the Fed to stay its hand instead of continuing to raise?
Yeah, because I really think that they've met what they're supposed to do as far as their mandate. We have full employment in the U.S. We're seeing wage pressure, and the thing about
monetary policy, normalizing interest rate policy, when we're starting to see signs of inflation in the U.S., they wouldn't really want to be going now, but because the dollar really is a reaction mechanism to this whole thing, I think it's really slowed them down and kind of tied their hands. Now, we'll see what happens. I think the dollar's been bouncing pretty hard here. If it keeps moving up in here, I think
from what you're saying right now is that all depends on where the dollar is going. So where do you think the dollar is going?
Well, it's bounced off this 93 level about 5 times in the last 18 months. We think this is probably the 6th. That's where I would put my money. What does that do? That's going to put some pressure on oil. I think we're going to see that coming in here. It's going to put some pressure on earnings outlook as the dollar gets a bit stronger in here. And I think that's really going to put some pressure on stocks. So the whole dynamic for where we go forward from here, I think, gets a little tougher if the dollar starts moving up through this 93, 94, 95. Let's say it gets up to 96, 97, 98. I think you're going to see a whole different perspective around risk assets. And so, investors need to be fairly cautious about that and keeping some dry powder.